How is business debt handled in the means test? Have you ever wondered how business debt fits into the means test during bankruptcy? This is an important topic for anyone considering filing for bankruptcy, especially business owners. The means test is a financial assessment used mainly in Chapter 7 bankruptcy cases. It helps determine if an individual qualifies for bankruptcy relief based on their income and expenses. The goal is to prevent those who can repay their debts from abusing the system. When it comes to business debt, things work a bit differently. Business debt is defined as money owed that is incurred to operate a trade or business. This includes loans taken out for business operations or even income taxes related to the business. The key takeaway is that the means test does not apply to debt that is primarily business-related. If more than 50% of a debtor's total debt is classified as business debt, they are completely exempt from the means test. This means they can file for Chapter 7 bankruptcy without needing to prove their inability to pay based on the means test calculations. This exemption acknowledges that business debts are often tied to commercial activities and do not necessarily reflect a debtor's personal financial situation. To determine whether a debt is business-related or consumer-related, bankruptcy courts use what is known as the profit motive test. This test assesses whether the debt was taken on to support a business purpose. For example, a mortgage on a rental property used for investment purposes may be considered business debt. In contrast, a mortgage on a personal residence is typically classified as consumer debt. Similarly, credit card charges for business expenses are viewed as business debt, while personal expenses on the same card would fall under consumer debt. The distinction between business and consumer debt can sometimes be tricky. Some debts may serve mixed purposes. For instance, a home equity line of credit used partly for business investment and partly for personal expenses can complicate matters. Courts will look at the purpose of the debt at the time it was incurred to make a determination. Additionally, student loans and tax debts may be treated differently based on jurisdiction and specific circumstances. In summary, the means test primarily applies to consumer debts, which are debts incurred for personal, family, or household purposes. If over half of a debtor's total debt is business-related, they are exempt from the means test. Business debt is identified using the profit motive test, which focuses on whether the debt was taken on to support a business. This exemption allows business owners to file for Chapter 7 bankruptcy without undergoing the means test if their debts are mainly business-related. However, if the debts are primarily personal, even if incurred by a business owner, the means test must be passed to qualify for Chapter 7. Understanding how business debt is handled in the means test can make a significant difference for those navigating bankruptcy proceedings.